Welcome to the Thursday edition of Tech Stocks Daily, where we break down today's firestorm in the world of NASDAQ-listed tech giants. Are your ears ready? We've got Google's leadership shakeup and spicy court drama with Epic Games. You won't want to miss where this battle royale heads next. We'll unravel the future of AI with Synaptics as they near their financial revelations and dissect Spotify's investor love affair mixed with sky-shooting projections. Plus, talk the buzz around upcoming Manhattan Associates earnings. So whether you're planning a stock move or just want in on the latest tech pulse, we've got insights coming right at you. Let's dive in. Oh boy, folks, Google's been juggling more flaming torches than a circus performer today. Let's dive into the tech behemoth's bustling docket of moves and news. First up, Google's exec shuffle is turning heads like it's the plot twist in a juicy drama. Alphabet CEO Sundar Pichai announced a seismic shift in leadership. Prabhakar Raghavan is stepping out of the search and ad spot to play a broader role as the company's new chief technologist. Raghavan, the intellectual titan who's been presiding over Google's search dominion for eons, or rather, since 2018, is moving on to partner directly with Pichai in shaping Google's technical trajectory. Filling his shoes is Nick Fox, who's been soaking up Google's culture since the days of AOL Instant Messenger, classic 2003. This maneuver is no blindsider. It's Google making deft moves in the AI arms race, pivoting like a seasoned surfer catching a monster wave. Slide over to the financial beat, and Google's been playing a bit of a cryptocurrency hide-and-seek. Cue the gasps from the crypto crowd. Over the weekend, Bitcoin and Ethereum price charts took an unannounced detour off Google's search results, sparking a flurry of confused clicks and conspiracy theories. Was this a tech glitch, corporate conspiracy, or both? Turned out, Google pulled the charts to iron out some wrinkles in the data's accuracy. Of course, the charts have since made a triumphant return, putting an end to theories they were trying to push down, rather than up on the Bitcoin hype scale. Boom. Switching gears to the legal arena, Google is making courtroom drama look spicier than a legal thriller. They've asked the Ninth Circuit Court of Appeals to put a pin in Judge Donato's ruling that would unleash new App Store dynamics, essentially giving Epic Games another place on the Google Play playground. Google's pressing the panic button on the ruling, citing security risks like an edgy plot twist in an action movie. But Epic Games isn't buying the scare tactics, likening Google's stance to cryptic fear-mongering. And breathe, that's not all. YouTube, Google's video megalodon, is rolling out its premium Lite plan to more countries. This move is akin to jazzing up a concert ticket by covertly removing the encore. While subscribers get a reduction in ads for half the price of a regular premium subscription, they're left without the belle of the ball, features like offline downloads and background play. It's a teaser making a play for your wallet without cranking up the volume on benefits. All this fuss and kerfuffle paint Google today as a company with agile corporate footwork, dabbling in leadership shifts, battling data mysteries, simultaneously dealing with legal wranglings, and enticing new subscribers. In the end, it's clear Google isn't just sitting around twiddling its thumbs. No siree, it's flexing its multi-billion-dollar muscles across every conceivable platform. Now that's multitasking for the modern era. Hey tech enthusiasts, buckle up because today we're diving into the buzz about Manhattan Associates as they prepare to report their third quarter 2024 earnings. So here's the scoop. Manhattan Associates, ticker symbol MANH for those trading geeks out there, is on all our radars right now because they'll be reporting their earnings on October 22nd. Analysts have their fingers crossed for earnings of $1.06 per share, with revenue estimates floating somewhere between a cozy $261 million and $265 million. Comparing this to last year, it looks like they're shooting for about a 10.45% increase in revenue. Yay for growth. Over the past few quarters, Manhattan Associates has done some nifty footwork, consistently beating the Zacks consensus estimates with an average surprise of a whopping 26.61%. When it comes to surprises, they're like Steve Jobs revealing the first iPhone, nailing it every time. Let's hope they keep their winning streak going. What's been fueling this vibrant growth, you ask? Manhattan Associates is riding high on a spiraling wave of demand for their mission-critical cloud solutions, specifically among retail, manufacturing, and wholesale sectors. These three amigos drive more than 80% of MANH's bookings, so they're kind of a big deal. Add to that some spiffy new solutions in their toolkit. Manhattan Assist and Manhattan Active Maven, powered by the ever-so-buzzy generative AI, could easily be the espresso shot that Manhattan's top-line growth craves. These solutions automate customer service tasks and help with investment decision-making, making life easier across different verticals. Let's just say they're making some serious cloud moves. Furthermore, Manhattan Associates' strong service organization and growing partnerships are giving them an edge. Who doesn't want good friends in business, right? On top of that, new products like the Fulfillment Experience, Insight Dashboard, and Manhattan Yard Management are untilting the scales to boost their top-line growth. However, before we uncork the celebratory Martinellis, let's talk about the not-so-fun parts. There's some uncertainty swirling around project timelines and numerous deal ditherings. Unpredictable macroeconomic conditions aren't helping either, the financial equivalent of spilling your coffee just as you're walking into a meeting. Analysts assess these earnings using a nifty tool from the Zacks model, which bets on a combination of a positive earnings ESP and a solid Zacks rank to maximize earnings beats. However, Manhattan Associates landed themselves a Zacks rank number 3 with an earnings ESP of 0.00%. No points for guessing. They didn't make the cut for a predicted earnings beat this time around. But hey, it's not over until the official numbers are in. Techies, keep your eyes peeled for the official earnings release, because how Manhattan Associates performs will stretch beyond the numbers. It might just tip the balance on how cloud solutions and AI continue transforming major industries. All right, tech enthusiasts, let's dive into what's buzzing about Synaptics Incorporated, trading under NASDAQ SYNA. But what's really exciting everyone today is their upcoming financial report. Mark your calendars for November 7th, 2024, because that's when Synaptics will spill the beans on their first quarter fiscal results for 2025. The plot thickens with a conference call, a favored pastime in the investor and analyst world, scheduled just after the market wraps up on that day. You know how it goes. Grab your popcorn, folks. But before you qualify this as just another earnings call, let's highlight what makes Synaptics worth your attention. They're not just any standard player. They're claiming their turf as innovators in AI at the edge. That means they're not letting AI be just a cloud-based phenomenon. They're grounding it right at our fingertips. What's the goal? To ensure smart devices become even smarter without skipping a beat, whether they're around our homes, in our offices, or tagging along during our commutes. Synaptics is the very name backing that chip in your device that winks at you when you touch it. And that's just the tip of their silico iceberg. They're the masterminds behind Synaptics Astra AI native embedded compute and Veros wireless connectivity technology. They're tirelessly stitching together a digital tapestry threading from touch to vision, video to audio, and like a digital Swiss Army knife, adding biometrics and security processing too. Marvel Studios, watch out. Synaptics' cast of tech characters just read the script for Smart Life the sequel. Let's jump back to why this financial release matters. For investors, this is the telling moment to assess if Synaptics' A-game in evolving technology is translating to ka-ching revenue. Does it spell innovative genius coupled with potential growth? Or does it dial down to incremental advancements without the accompanying financial gains? That's what we'll find out come the first Thursday of November. And hey, don't forget the live audio feed. Here's your inside track to all the executive speak, straight from Synaptics Brain Trust. They might drop breadcrumbs on future company directions, upcoming technology boldness, or perhaps clues on how they plan to own this edge AI playground further. Investors and analysts are being advised to pre-register for the call online. Smart move. Better start stretching those vocal cords to hit the ground running with questions. Fun fact, Synaptics exists in an interconnected fabric where audacious technology ideas occur, assembling together like a business-savvy Voltron. If you're the type that's eagerly eyeing where consumer electronics are headed, or where AI quietly creeps up in daily interactions, then earmarking November 7th for Synaptics report might just offer those gold nuggets strategic foresight's all about. So, there you have it. All you coders, stockholders, and tech romantics, keeping tabs on the burgeoning arc of AI-driven technology. Stay tuned to see if Synaptics emerges from this earnings reveal like a tech phoenix, leading the AI-imbued bonfire of the future. Grab coffee, tune in, update those stock prediction spreadsheets, and let's see where this Silicon Valley saga heads next. Hey tech enthusiasts, today's spotlight is shining bright on Spotify. This go-to music streaming titan hit the headlines like a catchy hook, and it's all about the money moves, mind-boggling growth projections, and slightly unsettled investor waters. First off, let's talk about those heavy-pocketed whales making waves in the Spotify ocean. The trading world's gossip is all about their latest love affair with options on Spotify's stock. Turns out, these big players have taken quite a bearish stance, like a DJ changing the vibe mid-party. A juicy 63% of these high-stakes trades are on the downside, which suggests they might expect the stock to fall. But let's not forget about the remaining optimistic minority who are placing their bets on the upside. Then there's the analytic angle. Some experts have been fiddling with their ratings and forecasts like they're remixing a classic track. We've got fresh ratings from the likes of Cantor Fitzgerald and KeyBank, ranging from neutral to overweight, and potential price targets dancing anywhere from $340 to $510. It's like watching an investment tango where everyone's trying to predict the next move. But hang on, there's more. Our friends over at Zacks.com noted Spotify's swift stride forward with an impressive 8.1% return over the past month. The Zacks technology services industry sees Spotify grooving to a 7.4% rhythm, suggesting possibly brighter days ahead. They've given Spotify a Zacks rank of number 3, which is sort of like saying, hey, it might not break out the thriller moves right now, but it's got potential. Looking deeper, Spotify's earnings forecast is painting a blockbuster picture. Analysts are predicting a stunning 397.2% increase to $1.79 per share for this quarter alone. Imagine binge listening stats going through the roof. However, while Spotify's revenue growth is noteworthy, its valuation might be a sticky point. The Zacks Value Style score gave it a D, indicating that it's trading with some extra sugar on top compared to its peers. So what gives Spotify its groove? It's not just the tunes, but its ability to tweak and twiddle with business shifts and strategy hits. With 602 million monthly active users, its clash between streams and strategists is an industry showstopper. But that's enough from me. I'm passing the mic to you, my savvy listeners. What are your thoughts on all this Spotify drama? Whether you're ready to buy, hold, or hit next, I want to hear why. Drop your musings in the comments. Let's chat it out like true tech trendsetters. All right, my savvy stock squad, let's zoom in on Google's parent company Alphabet and analyze whether it's time to hit that buy, sell, or hold button. Remember, folks, this is just my take, and you should always do your own homework before making financial moves. First, let's talk about the leadership shuffle at Google. Moving Prabhakar Raghavan into the chief technologist role alongside Sundar Pichai sends a powerful signal. They're going full throttle in the AI race. This move positions Google strategically in the bustling AI domain, suggesting their commitment to refining and leading technological advances. Alphabet is poised to enhance its core services while potentially capturing new markets, leveraging AI's diverse applications. Next, there's the crypto chart chaos. Sure, it sparked several conspiracy rants, but its swift resolution shows Google's commitment to data accuracy and transparency. Now the legal battle with Epic Games. Google flexes its muscles to defend its App Store ecosystem against changes that can introduce unexpected security risks and operational complexities. Win or lose, this case keeps Google in the headlines, which is usually not awesome, but we all know Google's legal team didn't join the team from Law & Order yesterday. Lastly, Google's push with YouTube's premium Lite subscription model shows flexibility and innovation. Keen on capturing more incremental revenue while catering to diverse user preferences. Sheer genius mixed with a touch of savvy. While they might lose out on some fee from the full package subscribers, they could gain volume in new premium Lite cohorts, balancing the scales of revenue. All this underscores Alphabet's proactive strategy and diversified business approach. If you're in it for that long game magic trick show, I'd lean toward holding if you're already on the Google Express, or even considering buying if you're itching to join the tech roller coaster. With tech titans, fluctuations are part of the game, but the fundamentals and growth potential in Alphabet's AI readiness and service flexibility are compelling. Just my 2 cents, but remember, Google is a mega corporation deeply entrenched across various domains, and success here is more of a marathon than a sprint. Weigh in macroeconomic conditions, keep tabs on those legal rulings, growth efforts in AI, and please do your own research before making any investment decision. Happy investing, tech trendsetters. What a whirlwind day across the tech landscape. Google's leadership shakeup and moves in AI make it clear they're not easing up anytime soon. Manhattan Associates is in the limelight with their earnings antics and the role cloud solutions play in their ambitious growth map. Synaptics is about to open the books come November, eager to prove their edge. AI prowess means business in every sense. Spotify is dancing to the tune of bullish and bearish investor high notes, all while projecting some sky-soaring growth targets. The overlap is a sea of strategies, AI advancements, and financial gambits, showing why tech never stands still. Whether you're evaluating Google's latest moves or placing bets on Spotify's next quarter, the intertwined lanes in tech today truly define the speed and innovation underpinning the industry. If today's recap was as intriguing for you as it was for me, make sure to hit that like button, subscribe, and share this video with your fellow tech aficionados. Stay tuned because there's always more coming your way, and I'll be back tomorrow with another round of tech-savvy insights. Let's ride on the tech wave together.